My name is Julian Navarrete, and this is the fifth week of covering the financial markets for you. Last week was a very eventful time for the financial markets, specifically talking about the Brexit. The UK left the European Union, the largest trading bloc of the world, and it shook financial markets, specifically talking about the three major indices, the Nasdaq, Dow Jones, and S&P 500. Now considering the rest of the world, hit very hard. Across the board was red for throughout Friday's trading hours and into today. We just closed down here in the United States. The Dow Jones closed down at 260, Nasdaq down 113, and the S&P 500 down 36 points. Just red across the board. This considers my two lessons that I learned this past week. Two major lessons. I learned a lot this weekend, but this past weekend I learned that in these types of events, you must be cool-minded and you must hold off because a lot of people were selling their assets. And the cool-minded, I believe, did not sell like the rest of the investors in the world. I think a wise lesson is that you hold off from selling. You hold and you don't touch your assets. Following my next lesson that I learned was that you wait a few days until the markets settle. Don't touch it because if you sell off or you buy into the dip, the markets can go lower and you can reach a different point. So two major lessons that I learned. I learned a lot this weekend as a potential trader as a career. I thought it was a very important weekend to learn. I was receiving a lot of information, so I thought it was a good idea to wait for the weekend to finish and pass over so I can bring you a video. Thank you for your messages. I appreciate your time and listening in on me. Now I want to get you involved, and I want to know your opinion and how you reacted to these situations. How did you react to the situation of the UK leaving the European Union as an investor, as a personal investor, as a portfolio manager? However it is, whatever you do, if you have an opinion, I would love to hear it. I'm connected with you on LinkedIn for a reason. I think that's important to me. I think that's very important to me. I don't just think that, I believe that. So thank you for your time. But regardless, this was an important time for politics as much as it was for financials. Politically, this has a huge story behind it. I mean, the UK has been positioned to leave the European Union for a number of years, and now they did it. The public audience spoke, and now they're out. Financially, for traders, I think it was an important time. I'm very happy to be a part of this because I wasn't a part of 2008. 2008 was a global sell-off as well, and now that I know and I understand a little bit about the financial markets, I'm happy to be a part of it. And I think it's something I like to do, and it gets me up in the morning to see these types of events, and I think a lot of traders find that to be a familiar statement. But definitely, I spoke to someone in banking this past weekend. A really nice conversation over the past weekend, and you get into gold, and they got into gold, and beforehand they got into gold, Japanese yen, the Swiss franc, and they didn't really touch anything, which is very important. I thought those were some key lessons, some key information, key points that I got to get. But overall, I think this is not over at all. There's a lot of information coming out today. S&P and Fitch downgraded UK sovereign bonds, downgraded UK, just getting hit hard, the United Kingdom. So stay tuned throughout the week. I think there's going to be a lot more information. This might be oversold in the United States because compared to the 2008 financial crisis, I think it's been contained. I think the global sell-off has been contained, or at least the domestic in the United States has been contained. Not as much as 2008, but still, watch out with the dip and try to buy the dip, maybe ride the wave. Something I'm interested in is the 60-40 ratio of 60% bonds, 40% equities. I think that's a good trading strategy for me as a beginner, and I've been trying to follow that. Not going crazy, not trying to react and just feel hot-minded. I want to be cool-minded, cool, calm, and collected. So I think 60-40 is a great step. Overall, I think I have a new tool, and this is outside of the Brexit concerns, but definitely there's some earnings report coming out this week. Coming out is Nike, Carnival, Barnes and Noble, and Monsanto. Four that I'm looking into. I think I'm going to start. I'm going to start to look at earnings report. I mean, stock prices are really influenced by earnings reports. So I'm going to start looking at the earnings report, looking at these numbers. Now that I understand them, due to my accounting course, I get a better understanding of their numbers, the balance sheet, the income statement. So I'm going to start seeing what kind of opportunities can arise from analyzing an earnings report. See, Nike and Carnival come out tomorrow. Now, I read up on Nike. I read up on Carnival specifically. And I think they're going to do well because they've been doing well for the past few quarters, maybe more than few quarters. And I think they're going to do well due to the Cuban rule that it's been risen. So it's more open to tourism now, is what I mean. And I think that's an important. I don't know if it's going to land in this Q2 earnings report, but I think it's going to make a huge difference. So maybe bet on them for the short term, medium term, but definitely considering this new tool. But thank you for listening. Definitely look out for the information that's related to Brexit. A lot of information coming out. But thank you for listening. I appreciate your time, and I hope you enjoy this week. I'm going to start to release some videos on different times just to keep it fresh and refresh everything. I think it's important to keep you involved. So thank you for responding to my questions. Please enjoy the week. If I don't see you, if I don't talk to you, you'll see me on LinkedIn. But cheers.